Good afternoon, good evening, and good morning, depending on where you are in the world today, and welcome to our webinar. We're going to focus today on conserving cash and improving EBITDA through active lease management. So just a few reminders like we always do. The webinar is being recorded, so check it out, go ahead and share, download it. We'd love to have you go do that. You can ask questions throughout the session. Just come down here to the question panel. Feel free to ask any question, and if we can get to them during the session, we'll answer them. And if not, we will certainly follow up with you and answer those questions. You can download previous webinars from our homepage, and here we are. You can check this out and other webinars at bramasol.com. You can come here to the home page. There are banners up here for you to look at some of our other webinar content and other areas we're focused on. Scroll down the page and you have a whole host of different webinars you can do. And then I also encourage you to check out our customer stories. There's some really great stories down there from fantastic customers like Discovery, GE, Hewlett-Packard, Honda, CP, and others. Encourage you to contact us. So feel free again to engage with us at bramasol.com. We have some great ways for you to contact us. We do have some ways for you to do audio, so feel free to do that. We have a Facebook page. We'd love you to check us out there. Come to LinkedIn. We participate in about 50 to 60 different LinkedIn groups. Would love to share and have a dialogue with you about that. And then again, we talked about it on our last webinar, but we do have a YouTube channel. Please subscribe to the YouTube channel. Come check it out. It's a lot of fun. We have some really good videos on there. We'll be adding a few more interesting things for you that are coming up, and we'll make announcements on future webinars about some really cool things we're doing in the areas of webcast, podcasts, and some Friday features that we're going to be doing. So look for that. Quick reminder of who is Bramasol. Bramasol is the leader in SAP Finance and Business Transformation. We are owned by and proud to be owned by Dr. Hasso Plattner. He acquired us in 2004 and has been instrumental working with our CEO, Dave Fellers, on a number of initiatives, including our growth back in 2011, 2012, doubling the size of our group, and then continuing to support us as we focus in on the office of the CFO and our work in S/4HANA, helping customers broadly change and transform their business. We are a gold partner, and we have over 25 years in serving our clients. We've done over 1,000 projects. We have deep expertise with over 200 experts here to help you solve problems. And we are co-innovation partners with SAP. And that means that you get to interact with us, and we interact directly with SAP and help solve a lot of interesting and challenging problems. So this morning I was on an interesting panel with some of my colleagues talking about business continuity during the current economic disruptions. And we talked about some of the impacts that are going on. And we know from a recent survey by PwC that 73% of these CFOs, or almost 3/4, feel that there's significant impact happening to their business and operations. And of those, 70+% believe that there's a potential global recession, which we're beginning to see, and that there's significant financial impact on their business. This will affect the results of operations. Obviously, we've seen a lot of the profit and the direction from companies of late. We're seeing a lot of activity around companies declaring bankruptcy, but we're also seeing a lot of companies declaring that they're doing amazing things, such as Amazon. Target said that they had one of the biggest quarters they've had in years for online orders. So a lot of activity, both positive and negative. But one key area that they're really heavily focused on here is the idea of cost containment, and really looking at how they go ahead and do that cost containment. And so what we thought we'd focus on today and talk about, so why are we here anyway? We're here because a lot of the companies that are out there that we're talking with are doing two main things. They're really looking to conserve and manage cash. And one of the ways, or a couple of ways you do that here, and we'll talk about, is lease renegotiations. You can also look at things like impairments. But a crucial aspect to that, of course, is to have the visibility into your cash and understanding your cash position. And of course, we have some great videos on improving cash position and managing risk through treasury, but we'll talk about visibility into your real estate and leasing in a few moments. In addition, we'll talk about impacts to EBITDA. So Julio de la Costa, who's here with me, and of course Carrie Peterson. And I'm sorry I didn't introduce you guys earlier, but you're here. We're going to talk about these great subjects. So there's the impact to the EBITDA, and then you have the opportunity to lease out or sublease. So we'll talk about that too. We are going to touch on a couple of scenarios. One of them will be a real estate space scenario in which Carrie is going to walk us through some impacts and ideas on what you can do with your real estate space now that we see the impact of COVID. But more importantly, these times of economic disruption have forced us or given us the opportunity to really think about how we use space more efficiently and effectively. And I want to note that, in this particular case, if you are changing your space requirements and you're using spreadsheets, you have a lot of complicated spreadsheet calculations to do involving net present values, internal rates of returns, reamortizations, revaluations, reallocations. Probably would be better to have an integrated tool like SAP CLM. If you have a disconnected solution, yep, you can enter the data. You might get some information out of it, but it's not linking to your balance sheet. It's not being reflected in your payments and doesn't give you that end-to-end straight-through visibility. Similarly, we're going to look at a movable scenario with 4 different lease contracts from printers and how you can gain and save cash by doing that. And similarly, with manual solutions and disconnected solutions, they're not always optimal. So with that, what I'm going to do is ask my friend and colleague here, Julio de la Costa. Julio, you've spent a lot of time in industry, but you've also spent a lot of time with our customers over the past 2 years. And consistently, we hear this same message about visibility and insight to action. Can you talk a little bit about this slide and what we're hearing from our customers and your thoughts?
Yes, good day, everybody. John, can you hear me okay?
I can, Julio.
Thank you. Yeah, so when we think about visibility, I think especially in today's environment, visibility is everything. Visibility will cause you as a company to be able to make better decisions faster. And we always talk about this insight to action. So when it comes to the first one you talk about is a finance versus an operating lease. From an accounting perspective, we know that EBITDA is earnings before interest, tax, and depreciation and amortization. So what does that mean? That means that when you have a finance lease, you're actually excluding those from your EBITDA calculation. When you have an operating lease, we know it's one line item compared to a finance lease, the one line item being lease expense, which is included in your operating expenses. So from an accounting perspective, what we've seen some companies assess is whether leases are actually a finance or operating lease. There's no relation really to following the guidance, but if the guidance says you have a finance lease, naturally it will actually have a positive impact on your EBITDA. Operating lease, because it's included in your operating expenses, will have a negative impact. So a lot of companies, as a result of the adoption of the new leasing standard, have been really assessing whether they have classified their leases correctly. The other one is, and I think Carrie's going to show this nicely shortly, is your visibility into your vendors. So what happens in leasing scenarios? We've worked in corporate environments where you have 3,000 print copy machines, and they're all over the company in all different subsidiaries. In many situations, what you have is you're paying the same vendor. So like, for instance, Konica, that subsidiary in Africa or Brazil, they're paying it directly. You have another subsidiary in London. what happens is when you have the visibility, it's actually going to give you that insight saying, wait a minute, I'm paying this company, let's call it Konica Minolta, I'm paying them for 3,000 printers, $400 a month. Is there a way to go and renegotiate and say, okay, you know what, I'm paying for 3,000 printers worldwide, my corporate account is in the US, can I get a better rate? And that's what we're seeing in real time. So the other one is really the improvement of your interest rate. So that we know that there's an IBR component in all leases, which is loosely connected as the interest rate. You know, for what is the interest rate if I were to lend you, if I were to go out and borrow money from the bank to purchase this asset, what would be the interest rate? And that is loosely defined as your incremental borrowing rate. So if I know that my incremental borrowing rate is much higher in different places, or maybe in the same country, let's say in California, you know, the IBR is 6%, and in, you know, Miami, Florida, it's 4%. Well, guess what? Now I have that visibility. I can actually go out and say, you know what? Let's try to renegotiate a lower IBR, which will result in lower payments. So this is really the value and the benefit of an integrated lease solution where you have all this visibility. And what I really like about it is it actually gives you insight to save money today. There's some studies going around of having an integrated lease portfolio with all these visibility tools and insights action, where you can actually save up to 12% of leasing expense. John, that's not pennies these days, right?
No, not at all. In fact, if you have just $100 million in leasing, that's $10 million. That's not, as we say, that's not chump change, is it?
Exactly. John,
Yeah,
I'll put it back to you now, but I think the last one I wanted just to quickly touch on, which actually Carrie's going to show very nicely shortly as well, is the forecasting. Because,
exactly.
you know, everybody knows what has happened. Some businesses have basically halted. So with an integrated solution, what you can do is you can have this runway to see what are my cash needs, but more importantly, what am I going to be paying? Leasing is a big part of any liquidity forecast. And if I know that, you know, I'm going to be paying X amount for the next 5 years, I can see that visually. And I can match that up with my revenue intake. And then I can make all these decisions that I have to say, okay, I need to reduce my lease payments. And I can use all those methodologies we just talked about to do that. John?
Yeah, Julio, spot on. And not only that, but real estate in general is often it has been shown to be the second or third largest cash expenditure for most companies and most businesses. And as a result, of course, it can have a huge impact on your cash flow. And this is a great way to help drive that, manage that, and have an impact that allows you to reinvest that cash in improving your business. So great points, Julio. Thank you. So with that, I am going to turn it over to Carrie. And Carrie, why don't you take us through a few of these scenarios and show us, um, how we can take this insight to action and where we can go to help companies save money, as we've discussed.
Certainly. Just give me 1 second. I'm going to go ahead and put this into presentation mode. Can you hear me okay, John?
I can, Carrie.
Okay, great. Well, I know you just mentioned insight to action, and I was going to talk about that, or I am going to talk about it, but I love Julio just a couple minutes ago. He said it's really insight to savings. So I might be using that instead. Right, what you're looking at here, and I'm going to be going through, a couple of these tiles, I guess, or analytics when I get into the system. But really, the messaging here is, if you look at the tile here, the invoice processing analysis is because CLM is it's part of SAP. So once your leases, all your terms, your conditions are in CLM, then, your leasor is just one of your, suppliers or vendors. your leasee. If you're doing subleasing, then those are your customers. And now all of that information from your leases becomes part of your accounts payable, part of your accounts receivables, and you can use all the analytics and KPIs and the drill through capabilities with, again, the insight to action, or now insight to savings tiles and analytics that come with S4. So just kind of set that up. What I'm going to be doing is leveraging the invoice processing analysis tile. Let me just go ahead and go to the next slide to show you what I mean there. So by selecting that tile, you can then navigate into additional information. And what you're seeing on this screen is on the top left-hand corner. This is looking at your spend, so the number of invoices that you have out there, and the dollar amount by month in that view. Then by just toggling right here, if I toggled to, instead of timeline, to supplier, now I'm looking at, okay, for my leasors, we're talking about leasing. So subleasing. So I'm looking at my leasors on, all right, how many invoices do I have out there? And again, what's the value of those invoices, or those lease payments? And this is comparing, I'm looking at different leasors. We're just gonna also use leasor instead of vendor or supplier. And as Julio was saying, not only could you go, okay, well, gosh, for this leasor, I want to take a look a little bit further and see what's making up those invoices, those contracts, but having visibility not only to maybe your number one leasor, but in the case that maybe on the printers you're leasing, some of your subs are leasing from other suppliers, and you can then compare the rates. You would think that your number one leaser is giving you the best rate, the best interest rate, the best payment, but having that visibility, that might not be the case, and it might be time to shift to a different supplier. And then just one more example here, by toggling on the bottom right-hand corner, I'm going to actually look at the line items or the balances by, again, leasor. So I just simply select that, and then on the bottom part of the screen, what you're looking at is for a particular leasor, what are my by month, what are my debits, my credits, what's my balance, what's my interest, my applied interest, if I made any purchases. So again, additional information that started just from this initial tile KPI. And then what you're going to see in the live demo is just by selecting a month here, if for instance on the balances, it's going to take me into the line items or the contracts that actually make up those dollars.
Yeah, and it's so
Julio,
crucial.
did you want to?
Yeah, well, I was going to make
John.
then Julio also, it's so crucial to be able to take a look at this, because not only can you look at this and see how many, let's say that these are your truck leases for your fleet and how you deliver. And with the issues and challenges we see around supply chain resiliency, you may want to be able to diversify your portfolio, because God forbid something happens to that specific lessor or partner that you have. Now you're stuck. What do you do? So again, it's not just, it is about savings. We're focused on savings, but it's also about you get this insight to action around resiliency for your business. Julio?
Yeah, John. So I think all great points, but I just wanted to add one other point. So what the audience may have missed or may not, but what Carrie just went into, she went into accounts payable from leasing. So that touches treasury, touches working capital. As we talked about earlier, leasing obviously is a big part of accounts payable. It's a big part of working capital. So she actually went from CLM into analytics, which took her into the invoice processing. So I just love that, because it's all about integration. It's all about free flowing. You're not even sure which module you're in, but you get to the right answer that's going to help you make that better decision.
Absolutely.
John?
Carrie?
Thanks, Julio. And this last thing, if you think about what I'm showing here on the bottom of the screen, now I'm going to go into the system. It looks a little bit different because I've been able to manipulate my homepage here and move tiles around and such. So it looks a little bit different. But this tile right here was that screen I was just showing. And what's really powerful too is as you're in the middle of doing your analysis, if you've got a report just the way you want it, all you have to do is just save, and then you save it as a tile, and then it's part of your home page here. Okay. So now I told you that if I selected one of those line items, then it takes me into the line item details, and that's what I've done. I've saved that as a tile. So let me just go into this specific leaseor, and I saved my filters. I wanted to see April and May. This is just going to take a minute. And this is going to show the contracts that made up that dollar amount for the balances at the end of April.
There we go.
We're almost, there we go. So again, I drilled through, and then I just saved this as a tile, and now it's available to me. So here are the contracts for this specific leaseor. And if I select one of the contracts, now I'm looking at all of my payments for April and May. Now, I created this contract this month, and so I went ahead and posted it. It went back into, I think, 2019. So I posted, though, and that's why you're seeing all of these different postings for April. But then I went and I made May's posting. So if I'm sitting here and I'm responsible for the payments or analyzing the payments for my real estate leases out there, I'm seeing that, yeah, it was consistent at 200,000, and then there was a change of 140,000 in May. Now you're going to see this in the scenario coming up that we actually renegotiated with our leaseor, and that's the reason that it dropped the payment. We're not using as much square footage as we were before. Now, so that's the leaseor side of it. As Julio said, I'm actually in accounts payable. So from looking at the contracts and CLM to what made up all individual contracts, now I could go into, if I just hover over the journal entry, I could go into the actual details of the journal entry. Again, just drilling through insight to savings, and also additional information on the supplier is available to me as well, or the leaseor. All right.
Yeah.
So that was kind of one example I wanted to use as far as the inside action before we get into the scenarios. Next, let's close out of here. Again, before we get to scenarios, we'll talk about, again, additional visibility, because it's all about, if you remember what John was saying, if you have your leases in Excel, if they're in disparate systems, you might know what your portfolio is, but being able to gather all that information, you don't know what you don't know, being able to see what the impact is on cash, that's what I'm trying to show here. So another example of that is with the query browser. So those of you that are on S4 and moving to S4, you're aware of this, is that with HANA, the database, the reporting that comes with S4 has been really enhanced because it gives you these query browsers and views. So what you're looking at are views into HANA, and there's hundreds of views here. I'm going to go ahead and just search on assets. So I want to see what views or reporting I can do on the fly that deal with assets. So here we go. Let's just select, okay, we're going to do the cash flow for IFRS. So when I talk about views, here's all of the fields that are coming up that are just the defaults for this particular query browser. I'm going to go ahead and launch that, and you can add any additional. So if there's, again, if you wanted to do your subleases or any additional conditions that were in your contracts, you can go ahead and add those to the view, and then you can report on those. So I'm going to go ahead and open this up for analysis. And again, this is just reporting on the fly. Let me just populate a couple required fields. And the company code. Again, this is now financials. Now, I wanted to show you this because I didn't want you to get tied up in the numbers. We actually, in our demo environment, don't have any IFRS contracts that are being pulled up in this. But the impact to your cash flow, it's looking at what are increases, what are decreases, By the way, if I wanted to see this by quarterly instead of year, I can go ahead and just drag that quarterly in there. And then if there were any purchases and such, we'll go ahead and blow that out. I know, Julio, you probably wanted to say a couple words on this. This builds out.
Yeah, so I mean, Carrie, what you're doing there is actually you are actually pulling a cash flow statement, and we know that, as we talked about throughout this webinar, is that leasing impacts working capital, and obviously every month you're paying X amount in lease expenses, so therefore it impacts your cash flow. And I think this is a neat way to actually look at the impacts of your leasing spaces and buildings and leasing assets and liabilities via cash flow lookup. And I think it's really cool from my perspective, because it really shows you all the impacts in different places throughout the cash flow statement. Okay.
Yeah, I think, Julio, I want to make a quick comment real quick, because I think, you as a former controller know this scenario every day. And what I love about this is the real-time aspect. You lived through scenarios where the CEO went to the CFO and said, hey, John, show me all of the impacts of the new space renegotiations and reallocations we did and how we've canceled some leases. What's been the cash flow impact? John walks into Julio's office and says, Julio, you're the controller, get me the cash flow statement. I want to see what this looks like. And 2 days later, you've produced the cash flow statement. You've set your meeting with the CFO. You had the meeting. He has questions, and so on and so forth. And it takes a week to get this done. Imagine that you can walk into the CFO's office and he says, Julio, what does the cash flow implications look like? And you both go in, click this report, open it up, and are having a real-time conversation about what's going on. That's what I love about this.
Yeah, it's really powerful, John, because if you think about it, and to your statement there, that's a real story. I mean, it takes some people 4 or 5 days to go back and assimilate all the data. What I like about this, though, is this is the what if scenario. You can actually see the change. So, the question when the CFO asks is, do you have a computer handy? Just pull it up and run it. In fact, now in S4, you can do it on your tablet or your iPhone, right?
Yep. Show me the digital boardroom. Awesome. All right, Carrie,
Absolutely.
keep going.
All right. And then the last, before getting into the scenarios, I wanted to go into the cash flow as far as looking at this. What this is going to show is that we actually have a real estate that we're leasing, and then we're doing sublease on that. So again, it's more insight into what really is your cash position for NCLM. So I have a variant out there. Let me go ahead and just select that variant. And I'm going to execute this. And now we're going to see for a specific leaseor, what are the leases that are out there? And we're going to be looking at the cash flow, the intake and output. And obviously, I could have reduced this down by different filters. Internet is, I think, part of the situation. Everybody's out on the internet these days. So it's a little bit slow.
Yep.
All right. Let me just, I might have hung up here. Let's try it one more time. Okay. Well, snap. Okay. Let's try it again. All right. There we go. Just gonna let this rebuild. And again, the purpose of what I'm about to show is that you'll be able to see and drill through back into CLM all the related contracts that you can only do if you've got a system. All right. Deja vu. And let's execute that. There we go. All right. And then I'm just going to sort. Now, I could export this out to Excel. A lot of people like to work in that. I'm going to go ahead and just sort it by ascending. So we are looking at contract number 20, which is, again, a real estate lease, office space, and the monthly payments. We saw this before, the 140, the 200,000 per month. In May, there was a payment of 140. And what's great about this report, too, is now I can see sublease. So the scenario that's coming up, as John had talked about, is that you're renting space due to economic trends or just trends in the business. You're not using as much space as you originally had negotiated. So you renegotiate with your landlord. You're going to be using less space, paying for less space, but you also know that you can sublease some of that space out, and that's what you're doing here with the other contract, but it is tied to the master. So you can see input, inflows and outflows for cash flow purposes. Okay. All right, so I'm going to leave this up because we're going to come back to this scenario. But let me go back to the PowerPoint. Okay. And the next, again, this is the scenario that we were just talking about, is we had a lease that started in March 2019. And this is what the right of use asset valued at 17 million plus. Then in May, we renegotiated. We weren't using all of the space. So we renegotiated and dropped the square footage. And then times change. Again, that's one thing I think about leases is they're fluid. They're always changing, whether we're talking about movables, and there's impairments, there's losses, the needs change, could be monthly, daily, yearly. So they're living documents. And so in June, we went ahead and said, well, no, it looks like we are beefing up our workforce and we're going to need additional space. So we renegotiate again. Now, trying to keep track of this, if you didn't have CLM or an integrated system, was going to be very difficult, if not impossible. This is a one lease, and you're going to see what the impact is with just one lease if you got hundreds or thousands of leases. Right. So let's jump back into this scenario. And while I'm doing that, John, did you want to add anything?
Well, as we look at this, we know that the world is changing, and we're going to be dynamically allocating space. And part of that, and the ability to use a solution like CLM to allow you to change your space allocations on a monthly basis, is crucial. And the fact that it integrates back into your finance and treasury solutions that are core in SAP is going to make life that much easier.
Great, thank you. All right, so we're back in the cash flow statement, and I'm going to just double click, select the contract. So now I am in CLM, and I'm looking at the master contract that we just saw that there's a sublease to as well. Now, I'm not going to go through all the different tabs. I'm going to assume that most people watching this are familiar with CLM just at some point, but I did want to point out what's impacting those changes in reevaluation. If I select differing measurements are used in this case for square footage. You're going to see in the next scenario that it's being used for printers because we have 10 printers at the same price that we are leasing. It could be for fleet, so you've got a fleet of vehicles. It can be multiple, it can be cars, it can be one object. You can do trucks for another one, so you can have different types of assets on one lease. But again, it's when fluctuations and there's formulas that are involved with differing measures. So the dates, as you know, in SAP, everything's date driven. So we had 100,000 square feet that we were leasing from March 2019 to April 2020. Then again, we talked about that we had a reduction in the renegotiation on the contract. And so starting May 1st, we dropped it to 70,000. Then on sometime in May, we realized that we really needed more space than that we were negotiating in the first example, or the 70,000. And so we renegotiated again at 85. So the dates are when are each of these measures up to, and then what are the effective dates. The next kind of point of, we talked about being able to negotiate, is the rate itself. So we're paying $2 per square foot up until we also had a renegotiation. Okay, we're going to take additional space in starting in June, and so we renegotiated the payment as well of $1.90 square foot. And then just to show one additional area of renegotiation that we did with this contract is the interest rate. So the interest rate was 5.5 starting June 1st, renegotiated. Prior to that, it was 7%. So again, having the visibility, knowing what your portfolio is per lease or across leasors, is going to give you the information to go to them and to do these negotiations based on fact and not just assumptions. Now, what I want to do next is go to the valuation. So we have the original valuation, and then when we negotiated for May, the 70,000 square foot, the system, CLM, did the entire revaluation. Now, I'm going to do a simulation based on what's going to happen in June. We're increasing our square footage, we're changing our interest, and we're changing our payment. By just selecting the simulation, which is another really nice feature that before you actually activate these changes, you can simulate what the change is going to be. Talked about the forecast, what's the cash forecast impact going to be. So I'm going to simulate, and then this is all of these, and behind all these figures are the actual general ledger entries that have to be posted in order to true up your liability and what your outstanding balances are. And I know Julio's going to probably go into a little bit more detail on that, but just let me show you what we have here. So starting June 1st, there's another correction. So the ROU is being bumped up by almost $2.5 million. The depreciation is being recalculated starting June 1st. Okay, so again, we had May 31st, 2019, let's go down here. So May 31st, and then again, it's just decreasing, and then also it's going to increase in June, because again, we're bumping up our square footage. We already saw that our clearing is going from 200,000 and went to 140, and then again, the payment's going to go to 165, or 161, sorry, and then the interest. So all of this, again, this is driving not only what your forecast is, but all of the back-end general ledger entries that have to be done because of this renegotiation. And Julio, I'm going to let you speak now.
Yeah, I just want to just tell the audience, doing these modifications is very complex, and I know a lot of accounting folks right now are very concerned about that, because that's what actually companies are doing today. They're actually modifying their leases. So in the old ASC 840, when you modify an operating lease, it was nothing to it, right? Because you were just basically having an expense every month and an accounts payable corresponding credit. So there was no valuation. Under ASC 842, modification takes on a whole new level of complexity, because as Carrie just showed, you are looking at your future payments, doing a present value calculation, and then amortizing that over the life of the lease. I don't know about you, but I've tried doing that in Excel, and imagine doing that in a Microsoft Excel workbook with 1,000 leases. It gets pretty complicated, and it gets even more complicated when you have to track multiple leases. The beauty of this, as you saw, is that it does it for you automatically. So it books the true-up entries, and it revalues, and then it books your forward-looking entries as well. So basically, you just put in the right changes in the system does all those entries for you automatically. So from that perspective, I think it's a very nice tool to have, especially in these times when modifications are happening. Carrie?
Thanks, Julio. Okay, so that was the first scenario. Let me just close out of these before we jump back into our deck. Okay, so that was the real estate scenario. Okay, now the movable contract negotiation scenario. We have, what you're going to see is there's 4 contracts out there for printers. There's one for 10 printers at $400 at 2.5%. A second one at 20 printers, $400 at 4.5%. Another one at 15 printers, $400, 3%. And then the fourth one was 35 printers, And they dropped the rate to $380, but the interest rate is 3.5%. You're looking at the payments for each, and then what the interest impact is for each of those. Again, if you've got disparate systems, if you don't have a visibility of what your entire portfolio is, as John had given the example in the intro, is these can be in different cities and different countries, across different subs, and you really lose that visibility. Where with CLM, SAP, it's going to bring that all together, so you have the visibility. In the middle, I just wanted to sub them that the June total payment, as is up here, was going to be $31,300. The June total interest, $27,221, and then the total interest expense to the end of the contract, $55,922. By going in, I'm going to take this last contract, and instead of doing 35 printers, we're going to change it to 80 printers. So we're going in and say, let's consolidate all these contracts. So there's going to be 80 printers. We'll go ahead and do it at the 400. We're not going to take the 380. We did 400, but then we renegotiated the interest rate down to 2.5. By making that change, just the 2.5 change, we're going to reduce interest by almost $20,000. Okay. So let's go ahead and I'm going to go into that scenario. Okay, let's go into the lease contract report. This is a Bramasol report. We're focusing not on really disclosures with this webinar, but just to recap, if any of you, so that Bramasol has developed disclosure reports that you just cut and paste, along with that, a lot of validation reports as well. And this one is one of the validation reports. So I'll go ahead and get my variant. Let me help with pulling the CLM information. And what this is showing, again, those 4 contracts, they're by period. So I have contract 39. You see the interest rate on this one, 4%, or no, 2.5%. Then I've got contract 41. So it's all the contracts we just talked about, the payments and their interest rates. So that's one view. And again, as you saw before, I can go ahead and click on the contract and go right into it. But I'm going to select a different report than that. Just want to show you a couple different options. Let's go into this contracts report. And this is just going to consolidate for you. So we'll go ahead and get a variant on this one. So this is by leaseor. Those are different ways of looking at information. And now for the specific leaseor, I'm going to see those 4 contracts and the interest rates for each of those, 2.5, 4.5, 3, and 3.5. So I'm going to go into the 4th contract. So go ahead and go into the differing measure and just show you that what I had done originally, we have the 35. I haven't reevaluated this yet. I'm saying we're going to do 80, so we're going to consolidate all 4 contracts and starting June 1st. The conditions. Okay, we're doing 380. It was 380. Again, time slices in SAP. Starting June 1st, it's going to be 400. And then we know that the interest rate is going from June 1st now going to be 2.5. So I am going to go ahead and do the revaluation, as you saw before. Simulation. And you're going to see that, again, before I actually put this into action, I want to see what is the impact. So by making that change, the 80 at $400 at 2.5%, you're going to see what my total assets are, the depreciation recalculated, the clearing, and the interest. And that's exactly what I showed. I'm just going to go back to the PowerPoint. And by making that impact, that's what we had here. So now we have 80 printers at 2.5. The payment's $3,200. It did go up a little bit because we're doing 400 instead of 380. The interest dropped from $27.21 to $19.37 for the month. And then the total interest at the end of the contract now is $36,416 with that 20% interest. And that's what's reflected here on the right-hand side, is what you just saw in CLM.
That's terrific, Carrie. You know, that's one of the things I love about CLM and what we're showing here is these are real ways for people to impact the bottom line and to take that $19,000 and apply it. And you know, okay, so you know it's $19,000. Imagine that this wasn't 10, 20, 15, and 35. It was 100, 200, 150. Now you're talking about $190,000. You're talking about truly talking about money and ways to impact your cash flow and your savings.
Absolutely. So we, you know, I think we've touched on a couple of things. We talked about the visibility to cash, the insight to savings that this CLM is providing you. Again, because it's just part of SAP solution, fully integrated with AP, AR, financials, and such. And we have touched a little bit about regulatory, which maybe I'm just going to finish up by going into this overview. That savings is great, but then staying compliant. A lot of people, I think a lot of companies aren't making changes to save money because it's too hard. It's too big of a headache. The risk of not being compliant is too great, because what I just brought up here is all the different areas, financial data that has to be reported on to be compliant. And, you know, it's automatic basically with CLM, where you can do those changes, you can have those negotiations and not be afraid. So.
Absolutely, and using the disclosure reports that Bramasol has developed with that, you know, you get that automated. Imagine that you had to not only make all of those changes in the valuations and the payment calculations, but now you have to take a look at the impact to your ASC 842 or IFRS 16 impacts. Julio, any thoughts on that while Carrie transitions back?
You know, I think the journey always starts, at least from my perspective, from compliance, right? So I guess taking a page out of your book, John, the comply, optimize, transform is, you know, you can optimize and transform all you like, but if you don't comply, you're going to be in a world of hurt. So, you know, we always focus back on the compliance. And what I like about this tool is this was actually certified by the Big Four, at least one of the Big Four, PwC, where they actually tested the transactions, tested the journal entries, tested the results, and concluded that, you know, configured correctly, this tool will actually comply with IFRS 16 and ASC 842, which is very important because, you know, you start on a foundation of compliance and you build from there. So, John?
Agree, and I think that goes to something you and I talked about, and we'll wrap up in a moment, but you and I talked about with our friend Kevin McCollum, which is this concept of digital trust. And it's more and more as you continue to move forward, the relationships and what's going on in the marketplace will be built on this foundation of digital trust. Did you comply? Did you reflect your savings? Did you reflect what you did properly? We talked earlier on about the idea of finance versus operating leases. And yes, there's impact to EBITDA, and you want to pay attention to that. But you also want to be able to show that you made the decisions in a way that you weren't, quote unquote, cooking the books. And so that's another important aspect to that. So thank you, Carrie and Julio. We'll wrap up. We know that everyone is looking at ways to conserve cash. We heard about 3/4 of CFOs want to lower costs. One way to do that is using the idea of active lease management. We have a podcast out there about this, but active lease management is not sitting back and waiting for things to happen. It's really taking a proactive use of this data and doing, as Carrie likes to say, I like that new phrase, insight to savings, insight to action, and using that, and then using the embedded workflows and alerts. We didn't talk about that specifically, but using the workflows and alerts to let you know when things are going to happen, when activities will happen, such as lease renewals. Setting it up so you are alerted ahead of time that a lease is coming up for renewal and you don't end up paying penalty clauses, or you don't end up in this situation of something called evergreen leases. And because of the way CLM is built, that can't happen. Some low-hanging fruit, we talked in other areas about impairments and casualties. You can see how that might help, how you wouldn't pay for something you're not using. Your impacts to banking or lessors via consolidation, and Carrie showed us a beautiful example of that in both the space and real estate, as well as the printers. And then the power of the visibility to provide insight to action or insight to savings. The fact that all of this is tied back and is cohesive and holistic across your entire finance platform. As you choose an integrated solution like REFX, SAP Real Estate, and CLM, Contract and Lease Management, you're able to really get that visibility that provides an opportunity to do this insight, to go take action that saves your company money or provides you the resilience and flexibility you need to move forward. So at the end of the day, what I want you to think about is there is a solution out there that's great. It's SAP CLM, and Bramasol has a low-cost, rapid implementation that takes 6 to 8 weeks or so to implement. We have automated tools that make it easy. We can do it in a net new CLM space. So if you're looking for a way to get off those spreadsheets and move on to SAP, this is a great opportunity for you to go ahead and do that. We also have tools available and can do third-party conversions from CLM to CLM from other third-party solutions that are disconnected and get all of the value that you saw here. So with that, Carrie, is there another slide? We'll wrap up. And I want to thank everybody for your time. I want to thank Carrie and Julio, as always, for their tremendous insights. And I also want to thank some folks in the background, Sharish Khandekar and Carlo Maglinau, who are our experts, who helped us with setting a lot of this up. And I encourage you all to reach out to us, and thank you, and have a terrific day, and enjoy your Memorial Day weekend. Bye-bye.
Bye.